All right, everybody, welcome back to Deep Dive. Today, we're going to try to make sense of this new 1099K thing.
Yes.
A lot of people are getting these now, and they don't even know like what to do with it. So to help us out, we have an expert from Igor Dykny CPA firm. Alenka is here with us.
Hi, everyone.
Thanks for joining us.
Happy to be here.
And just a quick reminder that this is for educational purposes only. Always talk to a qualified professional before you make any tax decisions.
Absolutely.
So yeah, this whole 1099K thing, I gotta say, like I got one last year and I had no idea like why I was even getting this thing. It was for a birthday gift.
Oh, wow.
That a friend of mine sent me, and it was a little bit over the threshold.
Right.
And it was just like, why am I even getting this thing?
Right.
So maybe we could start with like, what is this form even for?
So yeah, the 1099K is a form that you receive if you've used a third-party payment network to transact either business or personal payments. And it's really the IRS's way of being able to track the money that's going through these third-party networks.
So like Venmo, PayPal, that kind of thing.
Exactly. Venmo, PayPal, Zelle, Cash App.
Okay. So, but it's not just for like businesses, right?
Right. It's not just for business income. So that's a common misconception that a lot of people have, is that this only applies to business transactions, when in reality it's also tracking personal transactions as well.
So like if I were to sell like a bicycle or something.
Exactly. Or if you were to, sell clothing on the side or anything like that.
Okay, so that makes more sense then, because like I've sold a couple things, here and there, like online and stuff.
Right.
But I guess it just never hit the threshold for me to get one of these forms.
Right. And the threshold has been changing. And I think that's what's really tripping people up, is that in 2024, the threshold was $5,000.
Mm-hmm.
So for the year 2024, that was the threshold. But as of 2025, it dropped to $2,500. Oh, wow.
And then 2026 and beyond, it's going to drop to $600.
$600. So that's basically anything.
Basically anything.
Oh, wow.
Yeah. So you can imagine if you're using something like Venmo and you hit that $600 threshold, you're going to get a 1099K.
Oh, wow. That's a big change.
It is a big change.
Yeah.
And so you're right. A lot of people are getting these and they're kind of freaking out because they don't really know what to do with it.
Yeah, no kidding. So basically, if I'm understanding this right, there's like different categories of what can trigger this.
Exactly. So there are three main categories that the IRS uses to classify transactions that are reported on Form 1099K.
Okay.
The first one is business income, which we kind of touched upon. It's pretty straightforward. That's if you're using these platforms to run a business, right? If you have a side hustle or if you're a full-time entrepreneur, you're going to get 1099Ks for those transactions.
Okay.
The second category is personal item sales.
So that's where like selling your bicycle would fall into, or, if you sold a couch or any other item that you personally owned and you sold it for a profit.
And does it have to be like a profit? Like if I sold something for less than I bought it?
That's a great question. So you actually only are realizing a taxable gain if you sell the item for more than you purchased it for.
Okay.
So let's say you bought that bicycle for $100 and then you sold it a few years later for $200.
Right.
You have a $100 gain, and that would be reported on a form called Form 8949,
Okay.
which then flows to your Schedule D, and that's how you report capital gains and losses.
So you're saying if I sold that bicycle for $50, I don't have to report it?
You don't have to report it, and actually you can't deduct a loss on a personal item sale.
Oh, really?
Yeah, that's the unfortunate part of the tax law.
That's not very fun.
It's not fun, but it is what it is.
Okay, and then there's the third category.
The third category is gifts and personal payments.
Okay.
So this is where it gets a little bit tricky, because as you experienced, you received a 1099K for a gift.
Nice.
So sending money to friends or family for birthdays, holidays, or just because all falls under this category.
So if my friend sends me like $100 for my birthday, I could potentially get a 1099K.
Potentially, yes, especially with the threshold dropping to $600 in 2026.
Wow.
So it is possible.
Okay, so let's go back to the gift that I got right. And this is, I think, a common situation for a lot of people, especially with, weddings and graduations and stuff.
For sure.
But, I got this 1099K and I was like, am I really going to have to pay taxes on a gift?
That's a very common concern, and I totally understand why you would think that. But the good news is you don't actually have to pay taxes on gifts that you receive.
Okay.
So there is a way to clarify this on your tax return.
Okay.
If you receive a 1099K for a gift, the first thing you want to do is try to contact the issuer of the 1099K.
Okay, so like PayPal or Venmo or whoever it was.
Exactly, and request a corrected form from them.
Okay.
Explain to them that it was a gift, and they may be able to issue you a corrected form that doesn't include that income.
Okay, and what if they just say no?
So if they don't issue you a corrected form, or if you don't have time to get a corrected form before the tax filing deadline, you can still file your tax return.
Okay.
And there's a specific place on the tax return where you can clarify that this income was actually a gift.
Okay.
So you would report the income on your Form 1040 on Schedule 1.
Okay.
There are specific lines for this. It's lines 8 Cs and 24 Cs.
All right, I'll write that down.
And you would basically annotate on those lines that this income was a gift. And you can even provide a brief explanation.
Okay, so like just write gift.
You can write gift and you can say, gift from a friend or gift from family or however you want to explain it.
Right, so in my case, it was a gift from a friend for $7,500.
Perfect. So you would report the $7,500 on line 8Cs.
Okay.
And then on line 24Cs, you would just write gift from friend. And that way the IRS knows that this income is not taxable.
Okay, so that makes me feel a lot better.
Good. I'm glad.
So what about like documentation? Is there anything specific that I should be keeping track of?
Absolutely. Documentation is key, especially when it comes to these types of situations.
Okay.
So you want to keep records of everything.
Okay.
Keep your payment platform records. So if it's through Venmo, PayPal, whatever, keep those records showing the transaction.
Sure.
If it was a gift, you can get any evidence you have that it was a gift, like you said, a card, a note, anything like that.
Okay.
If you attempted to get the 1099-K corrected, keep records of those attempts, including any correspondence with the issuer.
Okay.
If you sold an item, keep your original purchase receipts.
Okay.
Keep records of the transaction itself, like any listings or invoices.
Okay.
And then, of course, keep a copy of the 1099-K itself.
Right.
And all correspondence that you have with the IRS relating to this 1099-K.
So basically just document everything.
Exactly. You want to be able to prove that this income was either not taxable or that you've taken the appropriate steps to correct it.
Okay, that makes sense. So I guess just to kind of sum things up here, it seems like with these new thresholds, everybody's going to be getting 1099-Ks.
Pretty much, yeah.
Pretty much. So it's really important to, one, understand the different categories
Yes.
that can trigger this.
Exactly.
And then two, just keep really good records.
Absolutely.
And then if you get one that looks wrong, don't panic. There's a process to fix it.
Exactly. Don't panic. Just be proactive.
Be proactive.
Reach out to the issuer, see if you can get it corrected, and if not, there are ways to clarify it on your tax return.
Perfect. All right. Well, Olenka, thank you so much for clarifying all of that.
Yeah, you're welcome.
That was really helpful.
I'm glad.
I guess just a final thought for our listeners. Just think about all the stuff that you do now through these platforms,
Right.
whether it's, splitting dinner with friends or, paying your rent or, whatever it is.
Or selling, things online.
Yeah, selling stuff online.
Yeah.
Like all this stuff now is potentially reportable
Yeah.
to the IRS. So it's really important to just be aware of it.
Be aware of it and be prepared.
And be prepared. Yeah. All right. Well, thanks again for joining us.
Thank you for having me.
And for everybody else, be sure to check out TaxSense for more helpful tips, and we'll catch you next time.